Peter Eliades with Stock Market Cycles Update for Wednesday, October 16th. We're going to do something a little different. You know what the Orthodox interpretations are now of the cycle projections. We reached some projections yesterday on a closing basis. We did not reach them on an intraday basis. The reason we do closing projections is sometimes they are reached on a closing basis, but not on an intraday. Our orthodox view right now is that there's further to go to the upside, but we're going to give you an unorthodox view today and show you a few things and the reason why. As you might note, we're showing you the daily advanced decline line of the New York Stock Exchange on this chart you're looking at. We have been promoting this chart now for several months because of its potential importance. I want you to see that this is a very finely constructed chart. These are not helter-skelter trend lines. We go to them in depth and zoom in and exactly start at the turning points. Let me give you an example here. This is where the lower channel begins in October of 2011. And as you can see from this chart, this line is exactly on that closing low for the daily advanced decline line. I'm not going to go through all three of the points. There actually are more than that now to show you how exacting they are, but they are quite exacting. And the reason I want you to know that is that what has happened in the past few days makes it all very, very interesting. Let's zoom back out again and take a look at this chart. So, we'll look at the overall chart again in terms of how it is set up. The October 11th low, right in here, I shouldn't say October 11th, October of 2011 low is right here. This is the February of 2016 low. So that's the lower channel. Now, upper channels are arbitrary. You can place them anywhere, but where I placed them was on the most external upper point between those two lows, and that was on this point in July of 2014. I believe it's July 1st. That again, let's show you that because that doesn't snap to. Let's zoom in on that so you can take a look and see how exacting we are with these advanced decline lines. That is smack dab on that high of July 1st, 2014. So this has been set up virtually perfectly, this channel. There's no arguments in terms of, well, you cheated a little bit on that. There's no cheating done. These are exactly on these turning points. So October of 2011 through February of 2016, and then July of 2014 is the top part of the channel. And to show how nicely it worked, take a look at the January of 18 high. We will zoom in on that so you'll see it by a very slight margin broke above it. But you can see how it stopped virtually exactly in January of 2018. Came down, came up towards it again. This was January 26th, and that's when the big decline began. So let's zoom back out again and come into the present time. Well, we'll also show you right here, this was the August-September of 2018 high, came right up to the line again. The big decline into December of last year, and this is what we have now done. Come back up close to the line on July of 2019, July, August, the end of July, beginning of August. Then we broke above the line, and this is when we started to show it to you. When we started to do our daily updates, we had broken above the line right up here, and we said to you at the time, that could be a very positive sign. We need to see if there's a follow-through for this breakout, or is it a false breakout? Well, we were up there from September 9th all the way into September 27th. Almost the whole month of September, we were above that line. And then, look, boom, down we come, below the upper channel line. And you have to start thinking, is that telling us something? We should not have come back below. We can come down to it, but we should not have come down back below it and well below it. So then when we did that, we came up to a short-term trend line, broke it by a tiny bit, and started rallying again. Now this is where it gets important. Look at the last couple of days. Yesterday we were right here, and today we are right here. Virtually exactly on that upper channel line again. So should it start breaking above it again, that's a more important argument for a market continuing to the upside. But the fact that for 2 days in a row now, we stopped virtually on that upper channel line once again, tells me, hey, let's be careful here. Let's take a look at some things and see if indeed there's a chance that perhaps we're forming some kind of top here. And so what do we do after that? Well, let's take a look at what I consider to be the most reliable projection generator, and that's the New York Composite Index. So we're going to go through these projections one by one. These are closing price projections. This is a 3.5 to 4 day offset, which gives you nominal 10-day projections. And look what happened. We didn't show this the other day, but this high the other day, the close was 13,604. Notice the box here, the low side of the upside projection, 12,999. So it came right inside that projection window on a closing basis. Again, these are closing price charts. So let's look at the next longer offset. The next longer one, 7 to 8 trading days, nominal 20-day projections. Look what happened. The one that's ruling here was we use this low. I'll show you how it sets up. We use this low. That's the closing low after the break below the last offset of 12,590.91. And when they break above both offset lines, which occurred on October 11th, you have a confirmed upside closing price projection. The lower side of the projection, which calls for 12,980, 12,9, what is that number? It's being blocked there. It looks like 12,998 anyway. So now we get the 12,998, and that's determined from this low close to across above the 7-day offset. If you take the distance from here to here, it gives you the distance to here. That is the upside closing projection, the lower side of it. But we satisfied that yesterday. We told you that yesterday. It was satisfied. So now we have two short-term projections that have been satisfied to the upside. The nominal 10-day and the nominal 20-day projections have been satisfied to the upside. What about the next longer one? This is 12.5-day offsets for nominal 5-week projections. Look at this. It's so interesting. We got above the red line here, and then we pull back a little bit today. The closes of this dark black line, but we have not gotten above this blue offset line. So the upside projection has not been confirmed. Now, if we have a sharp down day, what needs to happen, if this is a top, is for the next 1 or 2 days, we need to stay below this blue line. Now, that means that you can go sideways to down a little for a couple of days. But then, because the blue line comes down hard, the market has to start down hard, or there will be an upside projection confirmed. So now we have two projections that have been both confirmed and met perfectly in the lower side of their projection window. We have this potential projection that has not been given as yet. This line up here means that we went above the first offset line, but there's no box up here, so there was no confirmed projection as yet. That's 12.5 to 13 days. The next one is the 10-week offset for nominal 20-week projections. This is kind of messy and lines everywhere, and it's not a chart that's easy to read, but you can see what's happened here. I'll zoom in on this for you so you can get a better idea. There is an upside projection up here, but look what's happened. Go over a little bit so we can see. Okay, so we told you yesterday, if we pull back below both of these lines, this projection up here is no longer in effect. It will be invalidated. And all we need tomorrow is a close below, oh, it looks like approximately 12,960. So 34 points, that's like 2 or 3 tenths of a percent, not that big a decline. We see that decline tomorrow. Again, that gives even more of a clue that perhaps we've seen a more important top than we might now imagine. So that's the 10-week offset. This is the 20-week offset. Something very similar here. Look what's happened. We have a move above the red offset line, but not the blue one. Now, starting tomorrow, well, actually not tomorrow, there's some leeway tomorrow, but almost the same thing happens here over the next 2 days. So this goes into Friday of this week. By Friday of this week, we need to be below here, and then by Monday, the numbers go down pretty dramatically. So again, we have not confirmed this upside projection on the New York Composite Index. This is kind of a messy chart. The upside has been met here. We pull back and we've had a rally again, kind of a secondary rally up to these levels. The one thing that I wanted to show you here, and this gets a little bit interesting, is a little time cycle. The time cycle, I'll click on this red line here. These little black rectangles at the bottom show a time cycle, and the time cycle is a spacing of 36 trading days. But look at some of the interesting turning points. It gives this turning point potentially saying that yesterday's high could be a turning point. Then there's an obvious turning point on August 23rd, a low right down in here. There's a pretty obvious turning point here. You went a little bit higher over the next few days, but that could have been called a top right there on July 3rd. There was a short-term bottom here. That occurred on May 13th. This one was one or 2 days off. It was a pretty decent short-term high here. And anyway, it goes back in time. This one missed by a day, being a relatively important top. There was one. Here we go. Here's the beauty right here. Look at this one. This is the January 26th of 2018 high. Now, why is that important on the New York Composite? Because we've never gone above it again. This is the all-time high day up to today on the New York Composite Index. A lot of the indexes have gone on to new highs, not the New York Composite Index, which is all the stocks on the New York Stock Exchange. Though those are a couple of tidbits we wanted to show you along with the projection charts. So what else can we look at? Well, let's look at a few technical things. Let's go to an hourly chart. I call them hourly. They're 65-minute charts technically. Let's look at this hourly chart, again, of the New York Composite Index. A couple of interesting things here. We see this is a 14-period RSI. We came up and went slightly above the overbought level on October 11th, had a nice little decline. Then we came back on October 15th and made a new high. As you can see, this high is above this high. So we made a new high, but the RSI did not confirm. In fact, there was a divergence. Now, you've got to be careful with RSI divergences. A lot of people use them the wrong way. Just because there is a divergence doesn't necessarily mean you're at a top or bottom, depending on which ones you're looking at. Wells Wilder, who invented this indicator, says what you look for is you look at the low in between these two divergent tops, and if you break that low, then you get, in the case of an up move up to the 70 level, you would get a short-term, at least a short-term sell signal. Well, I put a bold green line where that reading is, and virtually any kind of decline of 0.3, 0.4, 0.5% would break us below that line and theoretically give a technical sell signal. The other thing that has occurred already, however, look at these two uptrend lines. Here's the price uptrend line going back to the low on October the 3rd. This bottom through this bottom. We're nowhere near breaking that. But look at the RSI. Same bottom, October 3rd bottom, through the same bottom, right in this area, October the 8th or 9th. And look what happened just 2 days ago. We broke that uptrend line after we had a divergence in price. So these are all things that accumulate both in terms of cycle projections and technical indicators that tell you there could be something different going on here. Now, we want to emphasize that the orthodox view of projections says there's higher to go intraday at least. So that is the orthodox view, and we have to respect it. But I'm leaning towards this unorthodox view, and that's why I'm showing you all these charts. There's one more chart I want to show you, and that is here. This is the Russell 2000. I actually changed the moving average. What I want in here is a 200-day moving average on the Russell 2000. As most of you know, the Russell 2000 has been underperforming the market basis almost all the other stocks, the high capitalization stocks, the Dow and the S&P and the New York Composite. But look what happened here. I put a little time cycle in here, which is all right, but right now it's just getting messy and in the way. So we're going to get rid of that. All I want you to see here is this is IWM, which is the Russell 2000 ETF. Virtually the same chart as a Russell 2000 and closing price chart only. Let's zoom in on this so you can see where we are relative to the 200-day MA. This is today's close. Let me show you the bar chart so you can see that bar chart wise we actually came almost exactly up to the 200-day. Now, if you're a good technician, you'll notice the 200-day moving average is moving up. And usually a break below an advancing 200-day moving average is a buy signal. And that turned out to be correct in here. You broke below a rising 200-day, and it was a pretty good little buy signal when you did that. Here's the difference, though. You look at where 200 days ago is, it's right in here, right after the bottom in December. And now we go straight up for the next 2, 3, 4 weeks. And we very quickly, within a week or two at the most, if we have any downside activity, can turn that 200-day moving average down. The most important thing today, though, is as I'm theorizing on a potential top, I want to show you that we came right up to the 200-day for the last 2 days and 3 of the last 4 days and could not get above it. Okay, it's a pretty long update. A lot of things I wanted to show you. Orthodox view, more to go, at least intraday on the upside. The non-orthodox view is we've got a lot of clues here that we should be watching this market very closely for the possibility of a top. What kind of top? I mean, it could be a short-term top, intermediate-term top, but any time now that we are so completely overvalued in the market, I look at any potential top as a potentially very important top. End of story. Thank you for watching. Please subscribe on the bottom right of the screen if you have not done so as yet, and then click on the bell that will give you notifications for special updates. Thanks a lot for watching.